Hi everyone, welcome back to today's trade of the day, and for today's trade of the day we'll be looking at the euro dollar. Right, on the euro dollar what I have is the daily chart, and I just want to focus on this area. Now, I know that recently the euro dollar has been on an upward push, right? It's been pushing and then it went sideways and then it came higher. But I have a, based on technical picture that I think it's going to stop somewhere over here, and then we might see a drop downwards. Okay, why I think this is going to happen? Very simply, for a few reasons, right? So following price action, we see the price sort of made a consolidation area over here, right? If you were to draw a trend line connecting all these supports, okay, this is something that we have, right? Okay, for a trend line, it's okay to cut the candle wick. We try to tap as many candles as possible, but no cutting the candle body, okay? Because the wicks are actually candles on the lower time frame, and then we can adjust the trend line accordingly on the lower time frame. So we have this trend line first, right, where price broke out and is coming back to retest. Now for trend lines, price likes to break out and then pull back and retest it. So that's one reason. Now the second reason is price is actually on a downtrend. How we know price is on a downtrend? When price is on a downtrend, it makes a low, it makes a high, it makes a lower low, it makes a higher, a lower high, it makes a lower low, it makes a lower high, and so on and so forth. So over here, price is a high, it makes a low, it makes a lower high, it makes a lower low. What we can expect price to do now is to make a lower high and then push down to make a lower low. That is essentially a downtrend. Now connecting all the highs, okay, starting from here, same rule applies. Tap as many candles as possible. It's okay to cut the wicks. Alright, so like that, we'll be tapping as many candles as possible. This is too tight, right? Because it's really right where price is now, so I want to give it a bit of room to breathe. Alright, there is a very nice intersection over here of the trend lines. That's the second factor, right? So first factor is this trend line, second factor is this downtrend, third factor, sorry, is the intersection of the trend line. Now fourth factor, we take a retracement of where price push started, okay? Price pushed up here, came back down, came back up here. This was really the place where price started to push down. Alright, so let's do a retracement from the high to the low. We see that really we see that the intersection falls right at the 76.40, 78.60 level. Okay, so we just want to highlight that level, right? 76.40, 78.60, right? And I'll just choose 78.60. Okay, 76.40 seems like a better level. Okay, it's right in line with the intersection, and in close there is this graphical overlap here. Okay, so very clearly we have our very strong resistance at this point. This will be our resistance. Okay, so now we have a resistance. Let's quickly go down to the 4 hour. Okay, we can actually ignore all these trend lines. Alright, and just tidy this up a bit more. Alright, so we have a resistance over here. Now we also see that price made sort of a zigzag pattern, right? So we can use Fibonacci extension, 0.1, 0.2, 0.3, open all Fibonacci ratios. Alright, you see this level is also right at 76.40. Okay, so we can have the 76.40 resistance level. Now I expect price to make a push lower, right? So there are two ways of finding it. One is this point, this extension here, to find the level. The second one is actually to take a retracement from this low all the way to where price is expected to reach. So let's do that. Okay, 0.1, 0.2, 0.3, open all Fibonacci ratios. Give me a moment. All Fibonacci ratios. Alright, we have the 61.8 over here. Okay, so this is a bit too far, so since this is so far, can ignore it for now. Okay, let's do the retracement instead. Okay, so we have the 50% at the graphical overlap. That's the first part, and then of course there is the recent swing low over here. So we have two targets already. Okay, and one thing I want to note is the negative 27 is actually over here. Alright, negative 27, if we look to the left, is also at the graphical overlap area. Okay, so that's where our stop loss will be. Okay, I will put my stop loss slightly above it to give the trade a bit of room to breathe. Okay, so there's a stop loss over there, and then I will select the 27. Okay, the 50%. Okay, something like that. Okay, It's not selecting. Okay, there you go. Okay, so we have our first partial take profit. Okay, the first take profit here, and of course the second take profit at this low here. Okay, so there are two take profits, and this will be our entry level, and we can go short like that. Okay, so I'm going to just change this line to our sell entry. Okay, so this actually makes for a very nice trade, going short. Okay, a stop loss over here and a take profit here. This is a very nice trade with a risk reward ratio of 1:3. Alright, and last but not least, okay, I mean the trend is intact, the trend line is intact. We can actually use we can actually look for indicators, okay, like stochastics. Alright, let me just change the color, it's a bit too dark, too dim. Okay, and we can draw a resistance line across the extreme, alright, as a resistance. Now every time stochastics comes back to test this extreme resistance, there is actually a big drop in price over here corresponding with here corresponding. Alright, so indicators confirm it, trend wise we confirm it as well. Okay, so thanks everyone for tuning in to the chart of the trade of today. I wish you guys all the best, and I'll catch you guys tomorrow. Thank you.